Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Holy tech earnings, Batman. Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin. That'll be the theme of the morning, obviously. We've got Apple. We've got Microsoft. We've got Alphabet. We've got AMD. We've got Facebook tonight. So a lot to get to. We got Amazon tomorrow. A lot to get to on the earnings front. The parade is in full swing. We'll talk a little bit about Bitcoin. The top of my movers tool this morning, my up filter in Benzinga Pro, it is all Bitcoin stocks and Chinese stocks. So take that for what it's worth. I'm not quite sure, to be honest with you. Guest today, Sean Udall will join the show at 8:35. He is the CIO of Quantum Trading Strategies. And then at 9, I'll be joined by Connor O'Brien, the president and CEO of Beanstox, which is the robo-advising app that is backed by Kevin O'Leary. Let's go to the charts and go to the markets here. Joel, good morning. How you doing? How are we doing this morning? Is it better?
Doing good on this Wednesday morning. You failed to mention our buddy Pumpin' Powell.
And I forgot to mention Pumpin' Powell, although I didn't mention it because I really don't know like there's no big announcements are expected today from the Fed. Maybe they're going to talk about tapering their bond purchases, maybe. But no big, timeline estimates are expected out of the Fed today. But yes, we do have Jerome Powell today. So
and you do get volatility on those days, right? And throw in tech earnings from 25% of the S&P 500 and you're gonna have a wild day, up and down and all around, and that's kind of what you've seen in the pre-market trading. Juiced it on the close to close at 94.50. That kind of felt a little juicy in the last couple minutes. They added about 5-6 points. Then you had the tech numbers coming out, so you had the lower open at 43.80, 14.5 handles lower, but boom. Just like Microsoft, they bought the dip, and you had a nice rally, 25-point rally, stopped at the intraday high from yesterday. So you have some good numbers. You just have a lot of chop and slop in between. But as always, looking follow through the pre-market high to see if we could get up to the double top at 16 and a quarter. Crude. I mean, this thing is just stuck at 72. Broke down a little bit yesterday. But came right back. So here we are looking at crude. I bet you we have, how many closes do we have in the same area? Wow, consolidation station. Still the high of this recently rebound, 72.43. But here are your closes. The last 5 sessions, I don't know if I've ever seen this. 71.91, 72.07, 71.91, 71.65 yesterday. So let's see. 72 support or resistance. Please let me know. Gold down 280, 1801.20. Not much to say about gold. Silver going the opposite way, but under 25 bucks. That's up 16 cents at 24.81. Rush into Bitcoin here. Yeah. Moment of truth for Bitcoin. Major resistance, folks. This has been up here for a little bit. So at the top of the trading range, do we have the mo to get through this time? Ethereum moving in sympathy, not as much on a percentage basis, but still $98, $98.50 at 23.31 and a quarter. And this is knocking on the door of the top of a trading range at 24.20. So some decent looking setups in the cryptocurrencies. And I'm sure they're moving the stocks associated with them as well.
They are, as I mentioned, the top of most of the stocks at the top of my up movers this morning. If they're not China, they're Bitcoin, right? So Riot, Mara, all that stuff moving this morning with Bitcoin. Yeah, but let's talk about tech here, Joel. I feel like we are as guilty. We're all guilty of this. I think we take these stocks for granted. We take these performances for granted. These companies are just money printing machines, and any sort of weakness that you get, like with Apple this morning, is down, and Microsoft was down. It's up now, but it was down earlier.
Microsoft was way down.
Yeah, but my point is, it's like splitting hairs. And yeah, I know Apple said we're gonna have slower growth this quarter than we had the last quarter, but it's like slow growth by a little bit. These companies, they make so much. They make so much money. Every single segment. We'll start with Apple. Every single segment blew it away. In terms of revenue estimates. The sales in China were great. So yes, we know about supply chain problems and rising costs and all that. And they warned of these slightly slow growth this time around, or next time around. But the numbers were amazing. What else is there to say about it? The numbers were ridiculous.
All right, give them to us then.
Okay, fine. Let me actually pull them up here in Benzinga Pro. Okay, Apple Q3 EPS $1.30 versus $1 estimate. Sales 81.4 versus 72.9 billion. Like I said, every segment beat on revenue. So iPhone beat, services beat, Mac beat, iPad beat. And we were asked, the question around Apple for so many years was, well, will they be able to diversify away from the iPhone? And if you look at a chart of iPhone of Apple's of the iPhone revenue as a percentage of Apple's overall revenue, it's been going down for the last several years. Services has been increasing. That's been the growth area, and so the story hasn't changed. This company just continues to just blow it away every single quarter. I think we can nitpick all we want in all of these stocks, frankly, but the numbers were amazing.
Yeah, and I mean, just look at your chart on your upper right. They broke out of that 20-some day trading range at 128. And then you smartly added on 20 points and hit a brick wall at 150. It was almost the feeling with Apple, just the way it acted yesterday. That's like people were going to sell no matter what. It just kind of, if it would have been a bad report, they might have sold it off. Great report. They'll look for any kind of negative. But what I'm so much looking at the pre-market levels, you slipped under 143. I will give you the after hours low. That comes in at 142.50. Not much on the dailies there, except the 142.96 level. But you're smartly above that, and you're kind of bid. So this is what I'm going to look at. I'm going to give a day, and then I'm going to give a little bit longer term outlook. 146.77. That's the close, right? So that's your first hurdle on the upside, and then pair of closes 148.56 and 148.99. That 148.99 represents the all-time closing high. So we'll see what happens at 46.67, also at that all-time closing high, and then you got the 150. So if this is the buy, right?
Yeah.
I think we should clear 150 soon. And just put this report in the rear view mirror and, just continue. You had the run up in the earnings. Earnings are good. Guidance not great. Apple has historically sold off after some of these good earnings reports. So let it fare it out. Let's see if you could clear 150 and beyond. If not, then I'd see continued profit taking in Apple.
Yeah. I mean, I think a lot of times we are so short-term focused and then focused on,
Yes.
what's the market going to do? Well, the market will do what it wants to do regardless. But looking at longer term, it's impossible to take anything away other than this company just continues to fire on all.
Yeah, I mean, whatever. What do you have? I got an iWatch. I got an iPhone.
I'm with you. A few years ago, I had one Apple product. I had an iPhone. Now I have an iPhone, an iPad that I basically never use. I've got the watch. I've got a Mac. I've got the AirPods. I've got everything.
I got the AirPods too.
Yeah.
AirPods. Yeah, I have those too. But you know what? I'm a PC guy. I mean, I got my Dell. I mean, I'm just Dell. I'm just wedded to Dell for some reason. I just can't, with the operating system. So, great products. That's about all we can say about Apple.
Yep.
Traded down $1.17, 145.60. So you have your setups there. Clearing 150 is huge, and we know there was all kinds of size up there as well when it traded up there.
And just the note on the Apple post earnings.
Ivan pointed out too, there was just a mound of sellers there. So keep an eye on the book. Sometimes the book can be helpful.
Yeah, and with regards to the earnings reactions in Apple, at least going back the last 3 years, the stock is pretty mixed after earnings. It really is almost as likely to trade higher as it is likely to trade lower in the 2 days, 3 days, and 1 week and 2 week periods after it reports. So reaction is not always positive, but in the long term, this company is a monster. Let's move on to Google.
No, I just want to say one thing. Yeah. Brock N here, I think, is new to the chat.
Okay.
Apple uses planned obsolescence.
Yeah, right they do.
Yeah, and boy, you know what? That's an old term, Brock. You might be up there in my age. I think I maybe used that term in one of my papers in college when talking about military tactics for the Vietnam War. I really do. I don't still have the paper, but I remember that term. But
I mean, of course they do, and it works. So I put it this way: I bought a new laptop Black Friday of 2019, and it's pissing me off. It is
really.
It is not. I bought like a MacBook Air. It is not performing well. And I'm very annoyed about it. But what am I gonna, like, my hands are kind of tied. I guess I could buy a Windows, but
you know what? I tried I do have a Surface.
Yeah.
And I hardly use it. I mean, because it's like my shoulders get tired.
Yeah, I hear you.
Typing on that thing. And I thought I could use it for travel and stuff, but
now you don't travel. So
so what do I need? I don't even know where it's. I should look for that puppy. But anyways, all right. Let's go on to Mr. Softy. This was some trading action.
Yeah, this was interesting. So they came out. The numbers were good. Of course, numbers are always good, right? Seemingly, $2.17 EPS versus a $1.90 estimate. Sales of 46.2 versus $44.1 billion. They gave some guidance during the call that I guess was strong. Talked a lot about cloud growth, which is of course their big growth segment right now. Azure revenue growth came in. That's Azure as their cloud came in at 45% year over year, which I guess was a little bit light. But still 45% year over year is let's come on now. We're splitting hairs. It's really good. What else did they say? Business processes revenue came in above estimates. I said cloud was a smidge light. They expect the cloud growth to remain relatively stable sequentially. Personal computing revenue came in line with estimates. This one was a mover after hours for sure.
It was huge. It spiked to 292. People are ignoring those mound of sellers at 290, similar to the 150 level in Apple. Big O. I'm going to throw out the high. I'm going to throw out the low. And I'm just going to focus on this once again, this 290 level. Forget these pre-market bursts over 290. Settling in here at 289.50. That they may very well have cleared out the sellers there, because you have popped through there on several occasions after hours and pre-market. But to me, this whole 290 292 area, it just seems thick, loaded with sellers. So if you're looking to take profits, make sure you take out the 290, you rip through the 291 handle and up to 292. Someone said 300 by the end of the year. I mean, why the heck not? It's come this far, this fast. On the downside here, after being up, or after being down and being up, it adds significance to the closing price from yesterday. And that closing price from yesterday in Mr. Softy comes in at 86.54. That's a ways away. I'll look at that as support. All-time closing high, 89.67.
All right, let's go to Alphabet, the company that, for my own sanity, should just do a stock split because their EPS was $27.26.
Jesus Murphy.
First a $19.21 estimate. Sales just under $62 billion versus a $56 billion estimate there. So, like I said, just printing money. How's this for growth? YouTube revenue growth up 70%. 70% for a 15-year-old product. This is amazing, right? 70% growth for a product that's 15 to 16 years old. It's madness, right? Cloud revenue came in higher as well, 4.6 versus $4.3 billion. I mean, I don't know. I don't know.
What about your Google neighborhood? You still sticking with that?
Oh, yes. I still stand by that theory that in the not too distant future, you will have entire subdivisions that are Apple subdivisions or Alpha or Google subdivisions or Amazon subdivisions, and all the smart houses will be powered by one company across the entire division. I stand by that theory.
Roberto Wilco mentioning they bought that YouTube for $1 billion, right?
Yeah.
And how much did they make from it in the quarter?
I don't have the exact.
You don't break it down like that, but yo.
You find it. You find it real fast.
You know what? I don't want to sound like a broken record here, but I will. And now I'm just looking at this 2,800. Two highs in that area.
Found it.
Yep, you did pop up to 2,820. So jot these down, folks. 2,800 in Google. I'm not sure where it's with the L.
Okay,
290 in Microsoft and 150 in Apple.
$7 billion is what YouTube
in 1 quarter.
In 1 quarter. Unreal, right?
Yep. Big run. I mean, let's just see the run continue in these things. S&P's at all-time highs. These at or near all-time highs. I mean, this is such an unprecedented move for Google that this year, I mean, you look at your monthly chart down there, and the monthlies just don't look like that. Look at the years, on a relative basis, how this thing has moved, and then it's what it's done this year. So you got the look at that. I mean, it just looks like a nothing muffin there, even though it went from 500 to 1,000. So it's having a great year. It can continue when it takes out 2,800.
All right, let's move away just for a second from last night and look ahead to tonight and look at Facebook here. Only because I would presume that Google blowing it away and Snapchat blowing it away and Twitter blowing it away, those are Facebook's 3 biggest peers in terms of how they make their money, right? And you would have to think now that the bar, not only is Facebook in an uptrend, but based on what their 3 peers did last quarter, the bar for Facebook is now unbelievably high. Now, it doesn't mean they can't
clear the bar,
right? But like the bar for Facebook tonight is got to be really, really high, higher than I can ever remember, probably.
75.33, 375.33. That's your all-time high. You bumped up it against it a few times. Actually hit 375 this morning. So there you go. I'm just coming up with resistance levels, folks, because these things have just had so far runs. If they have a bad report, it's hard, or they miss, or they say something. It's really hard to figure out where it's going to stop on the downside. Anybody that's short these things on a pullback is going to be throwing bids out there at just random levels. So a lot of different factors going into it. So you have the all-time high, 75.33, what we'll focus on, and then the all-time closing high, which you're above today at that is 372.46. So that's what you're looking at for setups in Facebook. And they haven't even got full blown with that Oculus thing, right? Have they? With the VR?
I'm still waiting for the metaverse to come around. I'm waiting for that.
Someone said to me, and I wish I had marked the date on this conversation and just went all in Facebook because, and I'm sure you've heard this from other people, that eventually like I love going to concerts, right?
Yeah.
But now people, not gonna, concerts. There's different risks associated, at least in the short term here. So why not if you want to, see, Thomas Red or Luke
Yeah.
Bryan or Dirk, go to. I know it's not the same thing, but
Well,
this and I haven't had them on. Have you ever had any of these VR things on?
no,
Where
I haven't.
but basically there is a concert and you don't feel like dealing with parking. You want to have I mean, to me, it's a poor substitute for going there or a football game or anything. And then they sell it. So Michigan holds 100,000, 105,000. They're not going to get it, but how many people will put on their whatever VR thing and be at get 50-yard line seats for $5. I mean that's the way things are going, and he talked about that, and also he mentioned that in that same vein, Zoom trying to work up to those things. Sunday, I am a classic rock guy. Little conversion over the last few years because there's just no rock out.
No,
It's
there isn't.
just how does Joel know Thomas Rhett? It's because I love rock and roll. Grew up on rock and roll. I some Pink Floyd, but more the Who, the Stones, the Beatles, ZZ Top, Leonard Skinner, and then all of a sudden, who's a rock and roll now? So a lot of these country guys are rock and roll, in my opinion, and I mean there was a while back where Lisa and I were going to these concerts. I don't know, every couple months. Great male to female ratio at those concerts too. So many more females than males. It's unbelievable. So there we go.
With regards to the metaverse, I mean, it wouldn't shock me for a moment if the technology gets to the point where that becomes a better experience. I mean, you can make the argument right now.
Led Zeppelin too.
You can make the case right now that watching a game at home on TV is better in a lot of ways than going to the game. It's easier. It's sometimes easier you don't always know what's going on when you're in the stands. If there's no PA announcement, it's hard to follow. You don't got to deal with weather or people or traffic or all that stuff. The metaverse is coming. I don't know when, but it is coming. And can you even just try to imagine the possibilities from a business standpoint? For you've got the real world and you got the virtual world, and you can just.
I'm telling you, the virtual. I mean, there's good. And what's the production cost? You could get 1 trillion, 1 million people watching something. Did I ever tell you my Led Zeppelin ticket story, or should I save that for when Dennis is back?
This isn't the one that involved you going to Ohio, right? No. That was a Michigan game. I think that was something different.
No. Real quick, Zeppelin was coming to Detroit my senior year of high school, and back then, this is a long time ago. They did different ways of getting tickets. So the way they decided to do the tickets, was they were going to put the information in the morning free press. Okay, how to get the ticket information. So my brilliant father, may he rest in peace, said, "Hey, I think I had a test the next day. I could do it." So he goes, "Let's go get a money order at the post office and then have your buddies drive up to the Free Press building. And then when the trucks leave at 3 a.m. or 4 a.m., get the newspaper and then go to the post office." So my buddies went up there. The Free Press truck came out. They got the information. We did the maximum amount of tickets. And so when other people were getting the information, because it was a first come, first served basis, when other people were getting the information, we were already mailing it in.
Yeah.
So we knew we were going to get great tickets. And then I come out of school about 3 days later, and one of my buddies is sitting in the car that I was going to get tickets with, and he's just in shock. And I'm like, "What's going on?" He goes, "Bonham died. John Bonzo Bonham died, and they canceled the concert." And I had to wait. And they said they were going to send the tickets back in the order that they got them. It took me months to get the money back from that. So I would have saw Zeppelin. I would have had good tickets, but unfortunately, and it's sad,
that story had a sad ending.
I know. And so I never got to see Zeppelin.
All right.
And I got stuck in traffic on the way to Woodstock. But anyways, let's get back to issues.
All right. Real quick, someone in chat, and I don't remember who now, but someone did say that my theory about the tech subdivisions is already happening in Silicon Valley. So it's reality. Let's talk about AMD here. And we can't forget about them. They also reported last night. EPS beat 63 cents versus 54 cents. Sales also beat 3.85 billion versus 3.62 billion dollars. They gave Q3 sales guidance above estimates in the low $4 billion range versus a high $3 billion estimate. And it was mostly good quarter, and the guidance was good. The gross margins were good. It was all good. It seemed like.
Yeah, I do not know why my AMD here is I am getting and now I just messed up my other chart here.
Whoa.
I don't have the I'll get rid of that in 1 second. I don't have the pre-market highs and lows 93.59, but I'm just going to stick with the dailies here, and that whole area, if it got up anywhere near 94.5 or 95 and a half, that's been big resistance. After being green so much, you do not want to see it go red on the session.
Pre-market high is 93.96.
Okay. So
morning.
follow through for that. It's just that area. We talked about it a couple of weeks ago. You can see it on the dailies. It's just a huge area.
Okay. It is 8. Oh, 30. Let's keep going on the earnings. Let's do Spotify. This one is a little bit disappointing here this morning. Let me get my numbers up. Or Joel gets his charts up on Spotify.
I got it. Spotify is working for some reason. Okay, go ahead.
That's weird. Spotify, they added fewer users than expected. They added 9 million users last quarter. That brought their grand total to 365 million versus a 372 million user estimate. They also guided a little bit light as far as users for the current quarter, or users as of the end of the current quarter. That was a light guide as well. So they're saying we're not going to add as many users this time around as the market thought. Talked a lot about India and slow growth in some of their emerging markets there, and they'd warned about this previously, but it's unfortunate that we don't really have anybody to compare this to, because Apple has not given an update on their Apple Music subscribers in like 2 years. So we don't really have anybody to compare Spotify to in terms of growth. They're sort of on an island, unfortunately, in terms of user growth at least. But what's the stock doing this morning?
It's down, step down, seller. Do you know how many listeners we have on Spotify?
More than we used to. We actually haven't checked in a little bit, but more than we used to.
I don't know what these stats mean, but we get people listen to us on Spotify. I think a few people have come from Spotify to here. Step down seller right now, folks. Someone wants out, and they want out bad. I can't tell you that this is one of the pre-market charts where, hey, you got someone stepping up to the plate. Now, you don't know when that's going to happen. You're coming into an area, you're down 9 sticks already. There's a gap to fill in here, but we're not even at the top of the gap yet. So maybe today or tomorrow, if this selling continues, you had a low at 23.52. That was on the 20th, and the prior day's high was 20.88. So not yet, but I think it should thicken up in the lower 220 handle. See if you get a gap fill. Obviously, you don't want to see this 211.10 breach. That was the low of the move. But right now, I don't even know. Did you get a pop on this at all? Yeah, you did. Man, why would someone take this up off the close, off those numbers? Or probably the numbers came out, then the user growth. But like it closer to 220. There's someone selling. They're selling now, and they might let up a little bit, give it a couple buck pop. But trading at the lows of the pre-market session, make sure you check that low at 9:29 and 59 seconds. See if it bumps up from that or how it opens in that area. But that's what I'm looking. A lot of competition for Spotify, right? There's just a lot out there. See what happens today.
There is a lot. I mean, they compete with Google to some extent, Apple to a greater extent. But again, Apple hasn't updated their Apple Music subscriber numbers in 2 years, so we don't really have any clue. We can't really compare Spotify's growth rate to anybody because there is nobody else really, I think, besides Apple Music. So Pandora is, I think, gone at this point, or
Pandora.
Who bought Pandora? Was it Sirius? I think it was Sirius bought Pandora. Anyway, let's move on.
Okay, say that a music thing. No, I do like the Doors too. Someone mentioned the Doors in there, so I don't want to leave out Jim Morrison. He's probably listening to the show right now.
Someone mentioned, Joel, what you should have done is not given back those tickets.
And kept them.
That's called an appreciating asset. That's all. That's an alternative asset class right there.
Yeah, boy, oh boy. I don't know. It was a couple hundred bones back then, so
they should have been NFTs, man.
I know.
If they were NFTs, you would have still had them, Joel. We could have resold them right now.
I know. Oh man,
that's the future.
It wasn't even the internet back then, Mitch.
Yeah,
it wasn't even the internet. It was years before the internet.
The internet was around. It just wasn't public yet. But
I don't think in 1981.
Yeah, of course it was around.
Intranet, yeah.
Intranet, ARPANET, it was around. It just wasn't public yet, but certainly it was around. Okay, let's do one more before Sean comes on. It seems like a bit of a reopening earnings trade this morning because you get stocks like Boeing trading higher. They return to profitability. And on the other side, a stock like Teladoc, TDOC, is trading lower. Their numbers seemed okay to me, but they're going in opposite directions here this morning. Boeing up, Teladoc down. I guess that tells me reopening is on for the moment today.
Okay.
I'll give you the Boeing numbers. Boeing, like I said, returned to profitability, 40-cent EPS versus an estimate of a 2-cent loss. Sales missed a little bit, but hey, profitable, right?
Profitable on its way back up. 236. You backed off. You're at 234. So I'll say a little price discovery there. I'll use 236 as an intermediate level. A gap fill to here. I would say for me, being up on the day, coming off that 205 low. I'll look at this gap fill as a possibility today. 236.46 was the bottom of you got to gap up to 236.46, and if you're really looking for some more, you get out that 236 pair highs just over 240. Boom, right there, making a trio of highs over right at 240. So there's my 3-star resistance if in fact you can get through the pre-market high. Always important to get through the pre-market high. Something like Boeing up 11, 12 bucks. I mean, you might have had people, fishing on the weeklies last Monday, last Tuesday, anticipation of a good report. They could have something really steep in the money here now, like a 225 call that was looking pretty punk, yesterday, probably up from where you bought it. Now, boom, it goes from closing 3 points out of the money until 12 points in the money. And now, and if you think about it, it's Wednesday, right? If you this is just a hypothetical situation, you could sell that 225 call right now when it's at 235 for a price that the stock could on Friday could be at 237, 238. And you might not even get the same premium on it. So that's just something to keep an eye on. But really like the 240 area as resistance.
All right. Shout out to Dave Penny, who had the comment about keeping your ticket, Joel. Let's bring on our first.
Yeah, I mean, I wish I would have known that, 30 years ago. But anyways.
Sean Udall is the CIO of Quantum Trading Strategies, is the tech stock strategist joining us here this morning. Sean, good morning. Thanks for getting up early for us.
Good morning, Benzinga.
You're always up early anyway. All right, you've probably had a busy couple of days here. It is tech earnings season, and you are a tech investor. So reactions to any of the big tech reports we've seen? Go.
Well, I mean, Google continues to be the Google I wish it was back in 2013 when it was my largest position. Although It treated me pretty darn fine, and I did well with it. But yeah, it's like everything that I was envisioning happening to Google probably took about 5 years longer, maybe 7 years longer. By the way, not a bad lesson there. Sometimes you just got to hang on to things.
You
and let
do
them go
hang on,
parabolic.
though.
I do a pretty good job. I mean, I think the story most people know. You know, I mean, I was able to not work for anybody else since 2011 because I was smart enough to buy Apple and hang on to it for a number of years. I think I've done that 3 times in my life. So I haven't held it the whole time, but there's been at least 3 periods in my life where I've held Apple for more than 3 or 4 years. But yeah, I like to move stuff around. I have plenty high turnover, but probably a lot lower turnover than you know, a typical professional day trader. But
for
I
sure.
think that kind of comes with, you know, if you do well and you accumulate a lot of assets, you don't have you have to trade with much smaller percent of your portfolio. So, you know, I mean, when I was starting out, I was trading with 80% of my portfolio, and now I'm trading with about 10% of my portfolio.
So, Sean, I want to ask you
Wow.
here. You always, you know, I like your blend of fundamentals, technicals, and sentiment. And I know that you do a really good job of combining these 3. And then sometimes I get like notions in my head, and whether they're bullish or bearish, and I just can't move off them. So I just want to get your take. And I'm looking at Apple, and I'm looking at 150. I'm looking at Microsoft at 290, and now it's trading above that level, so it's breaking out. I'm looking at Google at like 2,800. I mean, is this just like routine profit taking here? People picking, just a nice round number to, is it Bill Gates, who has to sell stock anyways, selling $1 trillion there? Are you seeing any kind of topping formations in these kind of things, or is it just, coming into earnings, people want to scale back, or, what am I overreacting to this potential resistance, or you think there's some major profit taking going on?
I mean, I think you got to kind of take it name by name, right? So let's back up a week later. So to Netflix, I think Netflix is basically being held up by bubble gum and baling wire. So, old farmer expression there. But in parlance, it basically means I don't know what the heck is holding Netflix up, other than I guess it has large participation in indexes, which are market cap weighted. So the persistence of market cap weightings, the rankings, it holds a lot of these things up. But so Netflix is very, like, I just don't understand it. I mean, I'm not one of these people like that thought Netflix should have been a $38 stock for the last 20 years. But I think a lot of the rise was deserved because of fundamental results and things like that. At a certain point, though, it just doesn't make much sense. I really do. It's almost like market cap begets market cap until a shakeout. So, but there's a ton of stuff we can talk about. As far as Microsoft, Google, all that stuff, honestly, Google's kind of relatively cheap, smashing results. I do think people might get a little too excited. What Google is seeing today won't continue for 3 years. Google is having a huge kind of reopen kicker, right? So it's weird. You say, well, wait, it did really well when everybody was closed. Well, but it's seeing a ton of acceleration on businesses that are doing more business and want to advertise more. So the comps, right? They always talk about comps. The comps for Google are easy right now. And they'll probably be easy for 1 or 2 more quarters. Then guess what? Comps get hard. Microsoft, same thing. It's kind of mega market cap. I mean, it was down last night. I kind of thought the reaction post earnings was what was it, down about $5, something like that.
It was more. It got down under 270. Yeah, they got under 278. I mean,
great numbers, but we're talking. I mean, this thing's $2 trillion now. Back in '99, companies topped out at $500 billion market cap. Well, the world's a different place now. Things are bigger, inflation, blah blah blah. But $2 trillion, and I mean it's not like right at $2 trillion. It's sort of well above. Let me look. It's 2.2 trillion, I think, right now. I mean, that's getting up there, man. I mean, so Apple is the other one. Apple's never been an expensive stock. In fact, I liked Apple the most when it was the most expensive stock, when it was basically the pre-iPhone Apple. I thought that was the greatest Apple that we ever had. and the results speak for themselves. Now Apple's kind of slow growth juggernaut. So here's what it's all gonna, how it's all gonna kind of unfold for these companies. I think in multiple years, they're going to be heavily curtailed in any M&A. So we've already seen the signs of DOJ, anti-monopoly. There's been cases against Google, multiple cases, I think, and a few, but they're going to have to grow internally now. They're not going to have to be able to just buy everything and keep growing, which has fueled their growth for a lot of years. Now back to sentiment. Now I'll kick it off to you. We're kind of at this weird, markets are high, yet we have hundreds of stocks basically have crashed again. Kind of like, remember when I called the SPAC low, which stuck really good for a few weeks? Well, we're basically kind of retesting the SPAC low, but sentiment is very negative right now. So we're almost equal, in fact, to sentiment lows that we saw, not the COVID lows, but sentiment lows we saw last October, November, which, if you remember, that was a heck of a good correction, which fueled the leg up that ended up culminating in the February, March high beta highs. They weren't the total market highs, but they were the high beta highs. So the high beta stocks, small cap, mid cap, has essentially been correcting since February, March. So the market's going to do one of two things. You're either going to refuel a huge trade in small cap, mid cap, and probably reopen stocks, banks, energy, things like that, airlines, or you're going to have a hell of a correction that nobody is prepared for. One of those two things basically has to happen. I think the former. I think you refuel up a big small cap, mid cap, reopen trade. Obviously, SPACs are part of that. But if you don't get participation, the market's super narrow. If you don't get participation, small cap, mid cap, SPAC, this thing could get a little spooky. And I don't think anybody's prepared for that.
Well, how long are you willing to wait for that to come? That participation?
I'm not sure. I'm not sure I understand the question.
I mean, eventually you got to draw the line and say, okay, small caps are not, they're just not participating.
Well, I mean, I never had to sell Google. I did. I never had to sell Apple. I did. I never had to sell Facebook. I did. If you own SoFi, you never have to sell it. In other words, just because stocks don't go up for 6 weeks or 6 months doesn't mean you have to sell them. Yeah. But if you're trading for a living, you better be damn sure you have money to tide you over through periods where you don't make money in the market. So, but no, I don't. So I'm not a trader that, hey, if it's not moving, I got to kill it and I got to move on and find something that has to move. In fact, I would say 80 to 90% of the traders like that end up losing most of their money and they have to go back to work doing something else. So, not to disparage anything you were saying, I'm just saying sometimes you have to be prepared that things take longer, not just saying, oh, I'm going to move to something that's, oh, hey, I'm going to start trading GME and AMC because they're moving. So my view would be position yourself in a way. Honestly, I've had a lot of cash for most of this year. So I think if you're opportunistic, by the way, we talked about SoFi. I think if you're opportunistic and you're willing to build positions versus just trade positions, you got some really good prices on a lot of things right now. Everything in the EV space except Tesla has been smashed. That doesn't make any sense to me. But the market does have a decision to make. Is it just gonna keep rewarding 5 stocks? I'm exaggerating a little bit, but it kind of is like 5 stocks just keep going.
It is. You know what? Yeah. You're the second person this week. We had JC Peretz on Tuesday, and he echoed the same sentiment. You know that if you look at underneath the hood, the market did top out in February, March, and then Absolutely. Spencer and I, when we we're prepping for the show this week, we're like, well, where's the money going? Like the money's going into tech. It's going into tech, and like where else is it going? Energy's kind of stalled, and it's you're seeing rotation, but if the rotate, and actually what the rotation was is whatever it seemed like it was just going into like treasuries. It was going into which is ludicrous.
What's been the biggest trade? That's probably the most surprising trade. Wasn't yield spiking?
Yeah.
Now, okay, yield's coming back from what would they top out? You guys know? Spencer?
No, no,
175-ish?
Yeah.
I'm talking 10-year.
in that ballpark.
Let's even say, okay, so it wasn't surprising they came kind of back down to like, let's say 150.
176 maybe.
Very surprising they came down to 120. So that by the way, that sets up a beautiful trade. Literally my best trade last year from a safety standpoint, and it made a ton of money, was banks. Banks are incredibly cheap again now. They're not COVID cheap, but they're incredibly cheap. What is the one group of stocks that will go up when yields go back up again? And yields are going to go back up. Banks. And I mean, one of the weirdest things is the absolute sort of persistence in selling of banks. And I'll tell you what, it's hard. It's literally hard to find a bad bank report in the last 2 quarters, and they're going to get better. So, if you believe kind of in the persistence of earnings results gravitates to stock price performance, et cetera, et cetera, et cetera, that's pretty much a golden rule. That's a pretty easy sector to be in, but it's not real sexy to trade kind of on a daily basis. But anyway, so that's
I want to touch on two things.
Yields.
I want to touch on two very important things here. First of all, what do you make of this rout in the Chinese stocks?
Well, I mean, it's totally deserved, because you have a very heavy hand. I don't know if we've ever. I mean, Joel, you and I have been doing this 25 plus years. I don't know if I've ever seen a group of stocks drop on direct government influence like this, especially sort of out of nowhere. Now, they're incredibly cheap, but I haven't bought any China stocks because I normally would be buying a little. Okay, hey, I'll put 2% of my portfolio because these things are so beaten up. If I hold them for 6 months, I get it, the easiest 50% ever. I don't know if you can say that now. I want to kind of think the opportunity is coming. Here's the problem. China stocks could sell off for 1 or 2 more quarters, because I just don't know what the end of this news is going to be. In other words, here's what could heal it. You get 2 quarters of really good Chinese earnings results, and the news just sort of dies down. At some point, people go, wow, how long are we going to ignore these stocks blowing numbers out? I'm talking more like Baidu, Baba, stuff. A Bizun. Like, I want to buy BZUN. I want to buy it, but I haven't. I want to buy KC. That's Kingsoft. It's basically kind of like a mini AWS for China. I don't know. I just don't know. Now, one of my rules is you can wait for chart turns, right? So whether 5 EMA turn, 10 EMA turn, whatever your technical turn, whatever trader you are, you kind of know when you think a chart has turned. So whatever rules you use. If you get a good chart turn that looks like it holds, it's not a one-day chart turn. It's got to be like a multi-week chart turn. But you get a good chart turn, maybe that's enough. That's a tough group though. And it's weird. It was like, I keep thinking, what is their end game on this?
Oh man, have you been listening to the show this week?
Honestly, I haven't.
You guys are on the same page.
But what is their end game? Like, what's their goal? Do they want to de-rich the richest people of China? I mean, this isn't going to hurt foreign investors at all. I mean, what's China's net ownership of domestic funds? Is it 2%, 3%? I'm going to guess it's 2%. Yeah. I'm going to guess your average pension fund has 2% exposure to China. I'm just ballparking. Your average trader has 0%.
Well, wait, but if you look at like some of the largest holders of a lot of these stocks, DD, Baidu, et cetera, companies like Uber and Fidelity and the big wealth managers and BlackRock all have huge positions in these companies.
They have huge positions as a percent of those stocks, but I think as a percent of total assets that Fidelity owns.
All right. If you're going to compare it against that, then yes.
No, that's what I mean. So of Fidelity's total holdings, it's probably less than 2% of their total holdings of everything Fidelity.
Sure.
I could be wrong. We could probably look that up if somebody wanted to Google search it. There's probably firms that have basically 0% to China. And the one name they own is Baba, because Baba's in certain indices that they have to own or something like that.
There you go.
I just don't understand the end game. Usually I can kind of figure out what China's doing. And honestly, China has made a lot of really good decisions over the years. I just don't know what, here. The only thing I can think of is that Ant Financial, Jack Ma basically, I don't know if he did this, but I think they perceived that he insulted the party. That was step one. I guess Didi wasn't supposed to go public. And Didi said, we're going public. And that was like, and I guess in China, you don't get 3 strikes.
one strike.
You get 1 strike and then you get death or something. I don't know.
I bet a lot of people wish they would have known that before the IPO.
What have you guys said? What is your guesses?
I don't.
Game?
I don't want to get too political
on
this show. So yeah, I don't know.
Spencer might have the best. I mean, sometimes the obvious answer is the best. Is Spencer? Maybe the Chinese government felt like they were losing control and had to slap down controls. It could be that simple. We don't live in now. Let's be careful. There's going to be elections in a year. Then there's going to be elections in another 2 years. If we're not careful, we could morph way more into socialism and communism than we care to even venture. But this should be a good lesson to everybody in the U.S. political system. Like, look, hey, you think it's cool having the government having all control over everything? Look at China. So just be careful who you vote for, people.
I think we're a little bit. I can find out. I could draw a little bit of a line there, Sean. I got it. Wait, let me get my fishing pole and reel Sean in on that one. I gotta get my fishing pole and reel you in on that one.
Up on that, but all right.
Yeah, we gotta reel him in. We gotta.
We're talking about communist dictatorship and the control over the. Let's not go there.
All right, let's. Okay, anything looking frothy to you? Anything looking frothy real quick?
Yeah, I mean, I don't know if I'd short it though. So I thought I might come on a few weeks ago. So by the way, about 3-4 weeks ago, I did say
you did talk about it
in private conversations. I said be prepared for low liquidity correction raid. That's pretty much played out to a T. Honestly, lasted a little longer probably than I thought it would. I said Nvidia was probably a pretty good short. That went down about $100 before the stock split. So, other than, FANG's kind of, I just think we're going to rotate again. But this is a tougher call than it was the last time. It's a way tougher call than October, November. That was crystal clear. I think we're going to, you almost have to. Again, you almost have to, because what's gotten cheap again is hundreds of stocks that are benefiting from the reopen. And maybe you could chalk all this up to Delta. I just don't think Delta is going to really change the fact that more people get vaccinated every day, the fact that we overreacted to COVID in the first place, and the fact that even when we shut down, a huge percentage of global economic activity still occurred. So if this whole thing's just been kind of a big Delta variant sell-off, that's kind of shaken the weak-handed people out of reopen stocks, then that's not going to last very long.
Who can say? I mean, it's like, who can say why? I saw a chart this morning from, I think, JP Morgan, that the new COVID cases in the UK have just like the chart just like collapsed, and it was like
that doesn't surprise me. Yeah, that would make sense just from a scientific standpoint. As vaccinations rise,
well, no, I meant in the short term, not in the long term. I meant looking at like the Delta variant. Like there was a spike, and then it just like collapsed. So, who can say whether it's Delta variant or anything else? I think we have to all go back to remember to how things used to be before there was a pandemic, and before we could all universally agree on why the market was down a certain way.
That's right.
We can't.
Well, Spencer, you know what you're hitting on? Again, really good you're basically hitting. The market hasn't had to deal with multiple cross currents for a while. It was kind of one issue. It was a one-issue market. It was a one-issue market post-COVID, and then it was various one-issue markets. And honestly, I kind of thought we were ready, especially small cap, specs, et cetera. You know what group I like, by the way? I like pot stocks. And I bet you both are going to slam me.
No,
I like pot stocks. Well, guess what? This is the first time I like pot stocks since last October, November.
Okay.
In fact,
I love it.
I bought Tilray at 7 late last year. That was actually, I think, a December buy. and I sold it in the 20s, and I don't even want to think about what it went to.
It was ridiculous.
But I mean, Tilray, in fact, Tilray I think reports today or tomorrow. Tilray, CGC, and then I have not liked the MSOs. All the pot guys,
killing me,
and I love them because I have a lot of friends in that group. But they believe pot is the best thing, the only thing, and it's going to go up another tenfold. I'm like, well, once things go tenfold, they kind of slow down, first of all. Second of all, they've really benefited from the spec trade into February. That ended, so that slowed down. Anyway, now we've had a correction in a group that wasn't supposed to correct. So, now, you know, it's one of these things where I think the pot trade could fuel up. It's going to have really strong growth, and it sold off hard.
Okay. Right. I like that. Thanks, Sean. Great information.
Thanks
a lot. Is that it? Wow, that went fast.
Sean, 20 minutes. Time flies.
Yeah.
Follow Sean on Twitter. I'll put his handle up at Udall Tech Strat. And yeah, thanks a lot, Sean Udall. We appreciate your time. Let me put the Twitter handle up real fast. There we go. All right.
Thanks, guys.
Sean Udall. Thanks a lot, sir.
Later.
All right. Time really flies.
Yeah, but he covers so many different things. And one thing about Sean is he covers like his technicals, his fundamentals, and then sentiment. And I think when one thing you listen to the show, we try and mix all those. Yes. And along one thing that maybe the one leg that we have up on him, but he doesn't pay attention is like the order flow. And that's what brings Triple D on. But wow, time flies when you're talking stocks with Sean Udall here.
Wait, speaking of the COVID and all that stuff, we did get Pfizer earnings this morning.
Yes, you're reading my mind, Spencer.
And they raised their guidance specifically because of the Delta variant, which I guess in hindsight seems obvious that they
went in. You know what?
They were going to do that.
Contrary, full disclosure, I nibbled at this one yesterday. And super long term. So
you dog.
So when it goes back to I'm looking for yield. I mean, I'm stupid. I miss all this. I just 4%. It's probably less than that. Now, I don't know. I did this. I have a breakout over 40. Will it finally hold or another profit opportunity? I mean, maybe this dog's gonna bark. I don't know, but I'm getting 4%. For a couple hundred years. So if it goes down, I'll buy more. Whatever. But getting a little pop today. Clear area. I mean, we've been up here before. Let's see what happens. Get up to this December high. December high comes in at 43.08, up 34 cents. Nice move. So there you go.
Oh, it's 8:59. All right, everyone. Just a programming note. So if you're wondering about Dennis will be back tomorrow. However, Joel will be gone now for the rest of the week. Right? Joel's out Thursday.
I am out. Yeah. So what are you guys going to do? And then, everyone's like, oh, Dennis, we miss Dennis. This show sucks without Dennis. And you're going to have hundreds and thousands of people saying, oh, this show sucks without Joel. That's what you're going to do. But no, tomorrow he'll be a little bit firmish. He'll be like, oh man, I just got to figure out what's going on. And then by Friday, he'll just be jamming again. So
the guy takes like one day off, and you would think he forgot how to trade. By the way,
I know he does. So okay, guys, there's a lot of stocks we didn't cover. I'm going to hop over to premarketprep.com and cover those. But great show, Spencer.
Thanks a lot.
You guys, y'all are great. Be nice to Dennis tomorrow. Okay.
See you at 3:30. All right, let me bring on my next guest here, Connor O'Brien, the president and CEO of Beanstox. Joel was just talking about different perspectives. That's what we try to do. It's what I try to do is get as many different perspectives as I can. It could mean different opinions, or it just could mean different focuses and different priorities, whether it be short-term trading or long-term investing or somewhere in between. My next guest, I think, speaks more towards the longer-term side of that equation. And I want to bring him on now, Connor O'Brien, President and CEO of Beanstox. Connor, good morning. Thanks for joining us.
Hey, Spencer. Good morning. Loved hearing that show you just were just on there with Sean.
Yeah, Sean is certainly a character. He is certainly a character, that's for sure. Okay, let's start broad and then we'll get more specific here. But tell what is Beanstox for those that haven't heard of it?
Yeah, Beanstox is an automated investment service that people can get by downloading the app in the App Store, Beanstox. And we developed it over the past little while, and it gives new investors in particular, but any investor, a way to get easy access to a personalized portfolio of ETFs and then an automated investment service to just put more of their money into that portfolio every week or every month, the amount that they choose, the timing they choose. It's different than others that are out there because it's quite personalized, but it's also a simple monthly fee.
So this is something that is near and dear to my heart. There have been many times, especially in the last year and a half, where we've had new listeners, new viewers, join the show, join the chat. They've seen markets going crazy and they want in. And there have been times where I've almost wanted to like shake them and say, "Wait, don't watch this show. Just start with an ETF." Or start with like one stock, or start with one ETF, and then go from there. But I think it's important to walk before you run. Trading is like running. Investing, I think, is more like walking. And I think a lot of people maybe skip that step. And this is the kind of thing that you're trying to help solve, right? Is help people walk. And yeah, if they want to trade, then great, they can trade. But at least they've got their long-term portfolio figured out, and I think that's what you're trying to do. Is that right?
Yeah, that's right. And there are people that can do both. You have your core portfolio, whether you're a pension fund, a billionaire, or just starting out. You have a core portfolio that is your steady strategy to just build and grow your wealth. And then you have your trading ideas. And you listen to Benzinga and you get some ideas. It's lots of fun. You stay in tune with the world.
Yes.
And you gradually do a bit of trading, and maybe you pick 2 or 10 or 20 stocks that you want to own or do whatever you want to do with them, but keep the core portfolio there so you're always building your wealth. Even if your trades aren't working, the core portfolio is doing its job.
So explain to us a little bit more about the investment process. So you can buy a basket of ETFs, is that and have that work for you? And
yeah, in fact, if you don't know, even if you don't know anything about investing, it'll do it for you. And if you do know a lot about investing, you can see the set of ETFs that your personal financial inputs that you put into the app select for you, and say, okay, Spencer, based on the portfolio, based on the personal information you put in, here are the 8, 9, 10 ETFs in a specific weighting for you that suit the inputs that you put into the system.
Well, what kind of inputs?
Well, for how long you plan to invest, how much money do you make, what are your investment goals, those types of things. Pretty straightforward stuff. Almost everybody can answer the questions within 3 minutes and get the account up and running. Choose the amount that they want to connect to their bank. Choose the amount that they want to start investing with. It's a minimum of $100. They can choose the amount that they want to invest additionally every week or every month. And that can be almost any amount, and it'll automate the whole process for you. And so it's just so easy to set it up. It's so intuitive. We hear from people who have never invested before to actually just see how it works, and it's easy. So people that love trading ideas on Benzinga can actually use Beanstox for a core portion of their portfolio, whether it's 20 or 60 or 80%, and get ideas from you and your guests for the rest of their portfolio.
So why ETFs? There are other robo-advisors out there that will give you a basket of ETFs, but maybe also stocks as well. So why is Beanstox specifically focused on ETFs?
I mean, there's so many different ways to invest, of course, and there isn't any one way that is the only perfect way to do it. ETFs are very cost-effective, very tax-effective.
Yes.
It enables us to give people a really efficient service. I hear the yes.
Yes. I have become an evangelical ETF preacher. They're tax efficient. They're cheap relative to mutual funds, generally speaking. They're transparent, generally speaking, right? Not all the time. And I think they're the greatest instruments ever. And so I agree with everything you just said.
I'll tell you a little bit about how we actually go about choosing the ETFs. So we look at all 2,000, 3,000, 4,000 ETFs that exist, and we screen them down for the metrics, the performance and risk and investment holdings characteristics that we're looking for. And we really prefer equity holding ETFs as opposed to the fixed income or bond holding ETFs. We do use a bit of fixed income, particularly for the more conservative client profiles. And in this low interest rate environment, we think people are going to be better served by having a slightly larger allocation to the equities, particularly if they want to build long-term wealth. So we actually, in the equity side, we emphasize equities, not just generic equities. We actually emphasize ETFs that hold equities that have dividend growth, and tech stocks. That's not the only thing, but that's one of the descriptions of why we're different, how we're different than the others. Other people sort of say, well, geez, Kevin O'Leary is your business partner. What's his influence here? And, he has a set of investment principles that have served him very well, his family wealth very well for many, many years. He's extremely diversified with the core of his family wealth portfolio, and more, but now using ETFs. And his view on investing for people, for his family members and others, keep investing as you're earning through your life, through every paycheck. Keep putting a disciplined amount of it into your investment portfolio and keep adding, keep it growing, with an emphasis on those categories I described: dividends, dividend growth, technology sectors.
What is the philosophy behind the dividends and the tech growth?
Yeah, I mean, dividend growth stocks are ones that tend to have good, healthy businesses. Dividends that are high but not growing tend to reflect businesses that have stopped growing and might even be slipping. And so the dividend growth category is interesting for that reason. On the tech side, we all know, we live in it. We're living it right now on this call. We basically have technology providing services that are incredibly efficient, and people use them, they pay money to use them. Whether it's downloading an app, and Apple's had phenomenal earnings because there's more and more use of their services. Downloading an app, I mean, 10 years ago, there was no such thing. Now, it's the beginning of a new era where investors of all sizes can set up a service in 3 minutes, fully SEC compliant, etc. They can set it up in 3 minutes, start investing $100 or more to start. They can add $10 a week, $100 a week, $1,000 a month, whatever suits them. Imagine that's all because of technology. And that's why we like the technology-oriented ETFs as one of the building blocks of the blend of ETFs that Beanstox clients get.
So what kind of control would I have, on Beanstox down the line in terms of rebalancing? Because people's priorities and their investment needs change over time, obviously.
Right. So that people can basically change their investment profile, which will then cause a change in their portfolio. If they grow to be multimillionaires through their ongoing investing in Beanstox, they can ultimately transfer the entire portfolio out into some other account that they can control 100% themselves if they want. So our goal is to help people grow at whatever pace they can grow every week. And here's the math: $100 a week invested every single week over the course of a full career. So let's say age 25 to 65, using the growth rates the S&P has generated for the past 30 or 40 years, grows to about $1.5 million. There's $100 a week. It's hard for some people to imagine putting $100 a week to work. But then if you go look at how much money you spend on lattes and whatever other things that are nice but not essential, you can probably find, for most people, you can probably find that $100 a week, get your core portfolio going and growing. And so when we talk about control, your question is control. I think for people that need the help, the discipline, like going to the gym every day, putting money into your investment account every day, eat your vegetables every day, Beanstox will take care of that financial discipline for you. Just set it up and it'll run it. And ultimately you can change your parameters, of course, if you want to.
I love that, because I have sort of fallen in love with this idea of getting rich slowly, right? I could try to get rich quick. I probably wouldn't succeed. I mean, I might, maybe, but I probably wouldn't. The odds are against me. But the odds are in my favor in terms of when it comes to getting rich slowly. I always, would sort of, my reaction to the viral, stock movements of stocks like AMC and GameStop and trying to beat like the hedge funds. My reaction is you can beat the hedge funds by simply buying and holding and not even playing their game. That's how you beat the hedge funds. one thing I was going to ask you is, I'm curious what the last year and a half has been like for you, for Beanstox, and what you've observed in terms of user behavior in what has been basically just a system-wide shock.
Yeah, I think, oddly enough, it's been very good from a business building point of view. A lot less traveling, a lot more people focusing on their personal situation. And so that's actually been good. And I think people have realized that they need to stabilize their financial situation. People have actually been given a bunch of cash from the government, whether you like it or not.
Yeah.
A lot of people have a pile of cash. Some of it's ended up in the market. The market's done well. I think the Fed, back to macro stuff, not really Beanstox, but macro investing stuff, the Fed has stepped up. And, without the trillions of dollars from the Fed, the markets would not have done what they've done. I think the Fed has essentially changed the risk profile for investors in a way that's probably good. I say probably because nobody can forecast what the Fed's going to do 10, 20 years from now. The other thing I guess I'd point out is that what we've done with Beanstox, and you can go look at it on this website that's at the top of the screen above my head here, startengine.com/Beanstox. People can find information on this crowdfunding. Last year, we did a crowdfunding. It was, I can tell you what I'm allowed to tell you, and the rest you'd have to go get in terms of info on that website, startengine.com/Beanstox. We did a raise of $1.07 million. Sounds very small. That was the SEC limit at the time. The limit has now been moved to $5 million per year on this Regulation CF type of crowdfunding. It's a bit like venture capital investment, capital raising for the company, investment opportunity for the investors. And it's a way companies can expand their client base and to give their clients an opportunity to become investors in the business. And so last year we did that, and it sold out long before the it's called the offering period. And we just started a new one, and that's on that same site, startengine.com/Beanstox. We really like it because we get more users of the Beanstox app and automated wealth service to also become investors in the business. And they're a bit like brand ambassadors, and they give us feedback. They tell us what they like and they don't like, what do they want to see next, etc. Yeah. So it's a really interesting way to grow.
I'm curious, about the decision to do crowdfunding. The regulation that allowed it is only like a decade old now, so it's still pretty new. But it seemed like maybe you can correct me, but it seemed like from my point of view, it's taken a few years for momentum to build. I'm talking just generally speaking in crowdfunding, because I remember 6 years ago, everyone was all excited about it, but maybe it took a little bit longer for it to gain more traction, the trend of crowdfunding. Did you observe that as well, or have you seen something different?
Yeah. I mean, some things take time, and the internet was not as exciting in the early days.
True.
Nobody even used it except for the scientists, and now look at it, it's everything. So crowdfunding has actually been growing incredibly quickly. I was reading up on it for this discussion, actually, and for a series of years, the amount of money raised by small or startup or growth companies using crowdfunding as the methodology has doubled. And there are more and more platforms and different people wanting to use crowdfunding as an investor or as a startup that wants to get some capital going. They can pick and choose which platform they want to use. And it actually, according to some sources, the money raised by companies using the crowdfunding platforms now exceeds the amount of money being invested by venture capital firms.
Really?
That's what some articles say. I didn't do the math. I just read the articles. And there are some success stories. And some of these businesses that are success stories are really straightforward businesses, and others are more tech-oriented and so on. So I think there's another interesting trend I read about, which is that venture capital firms see the crowdfunding platforms as deal flow sources. They can just click on the platforms and say, oh, I don't like any of those companies except for that one. And now I can read a whole bunch of information, and then I can contact the company and say, hey, when you're ready for a VC round, we're here. We want to talk to you. So that's interesting as well.
That is interesting. Good question here from our chat, Doc and Dave. Can Beanstox be incorporated with a Roth IRA?
Say that question again, please.
Can Beanstox be incorporated within like a Roth IRA or any type of
So we will be building the IRA feature so people can have those kinds of accounts.
Okay.
Up until now, we've had very little demand for it. Our focus, our target market is what we call middle America. It's not the highest quartile top earners. It's people that basically have no investment account. There are 100 million of them, over 100 million adults in America that have no investment account. And so we want to get those people investing. And once you start complicating their thought process with IRAs and everything else, you lose them. So we will be building it in. It's not in there right now. As far as the crowdfunding investment, can people buy that through an Roth IRA? Maybe. They'd have to go and look on the website, startengine.com/beanstox, for our info, and startengine.com help desk to get the answer to that question.
The whole idea of crowdfunding is especially interesting when you think about, particularly this year. It seems like people have been making some investments or stock picks, and they've made that part of their identity, right? They see themselves as not just another AMC shareholder, right? There's like this whole movement now. It becomes part of them. And to the point about crowdfunding, this is just another way to be more than just another shareholder, right?
Yeah,
and
be involved in what you're doing with your money, for sure.
Right.
And I think, the comments that I've read on crowdfunding for investors is like anything else, diversify.
Right.
Choose how much you actually are interested in putting into these less liquid venture capital style investments, and diversify in so many ways everything you're doing with investing. Have a core portfolio that is steady, stable. Maybe it's automated, done for you if you don't want to do it yourself. And get some trading ideas on tradable stocks on Benzinga and so on, and enjoy learning about stocks. I think it's a lot better than going to Vegas. And then maybe also do a little bit of more venture type investing to also just enjoy learning about what kind of businesses are evolving, support some of them through crowdfunding, become a brand ambassador, which is what we would love to see for Beanstox, is have the people invest in the business, talk it up, and tell us what they'd like to see us to build next. And so I think people should diversify in not just the stocks, but in just the things that they're doing in life. And I think investing is a great thing to be doing with a lot of time people have in life.
Connor, before I let you go, and I'm on with Connor O'Brien, the president and CEO of Beanstox, I'm curious just from your own portfolio, what ETFs you've got in there, dividend, growth, something else, a lot of fixed income. I don't know.
Well, pretty much equity focused, and so I'll start with that. And Kevin O'Leary and I created an ETF business years ago. It's called O-Shares, and we do not have those O-Shares ETFs in the Beanstox portfolios simply for conflict of interest reasons. We don't want anyone thinking we're trying to put their money into something like that. We're just open architecture. We look at all the ETFs that exist, but my money is in my core portfolio money is in equity owning ETFs, a range of those. And of course, I have an ownership stake in Beanstox, and I'm putting a ton of my time into getting it going and growing and expanding the services we're providing people. The other thing I'd say about it is it's actually really, really fun and rewarding to be bringing more people who are not investing toward becoming investors, getting control of their financial lives. It's pretty motivating to see people that you can actually help get on that track.
I completely agree. And Connor, I mean this sincerely. I genuinely hope you guys continue to grow and succeed, because at the end of the day, all you're preaching is responsible investing behavior. And I hope that people can take advantage of that on platforms like yours. So
if I could just make one more comment. I really encourage people, whether they are interested in Beanstox, using it as an automated wealth service, they can go to the App Store and download it and check it out and choose to use it or not. Give us your comments. Send an email to support@Beanstox if you have any suggestions. Love to see it. The other thing is, anyone who's interested in crowdfunding, whether they want to start their own business and look at how it could be used, go take a look at startengine.com. The /Beanstox page is our page. Learn about it. You've heard what we've just talked about now. Go check out what we actually have created as essentially a prospectus online and see how it works. We raised $1.07 million last year, and we're raising the subsequent amount that I can't say on this call. You have to go to that website to look at it, SEC rules, and learn how we do it. People who are entrepreneurs can then adapt some of that to their business model and get their dreams going and growing. I really encourage people to learn about it.
Okay, I just put the link for all you watching. I put the link to the Start Engine site in the chat. It's on Twitter. It's on YouTube. It's on Twitch. Connor O'Brien is the president and CEO of Beanstox, joining us this morning on Pre-Market Prep. We appreciate his time. Connor, thank you so much. Would love to have you back on again down the road and get an update on how the campaign went and how things are going on with the app and service.
Fantastic. Thanks, Victor.
All right. Thanks a lot. So again, I mentioned the link is in the chat. It's also in the description, at least the link to Beanstox's site, which you can then navigate to the crowdfunding page if that sort of thing interests you. Again, different perspective. I don't. Sometimes I feel bad. I don't feel like we talk enough about longer term stuff on this show. So thanks to Connor for bringing that perspective. And then with regards to someone in chat asked about Robinhood, I very much would have liked to ask Connor about Robinhood. I was advised that he's not allowed to comment specifically on other companies, but I would have liked to get his thoughts. It is interesting with the timing because Robinhood does IPO tomorrow. And again, another company that as they say, are trying to encourage responsible investing. Though I don't always know how much responsible behavior happens on that platform. But anyway, thanks to Connor O'Brien, the president and CEO of Beanstox, for joining us here this morning. Thanks also to Sean Udall, the CIO of Quantum Trading Strategies. Thanks to all of you in our chat. Please remember all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Hey, how many likes are we at today? 285? Oh, come on now. Come on. We had a great show today. Give me at least a 300. I'm going to wrap and I'm going to head on over to live trading with Benzinga, which I think is that, are they live already? They are not. They're waiting for me to end, I think, before they go live. So I'm going to wrap it up. They'll go live. I'm going to join them. Money Mitch, Ryan Faluna, myself, trading through the open, hanging out with y'all. Yeah. So smash the like, subscribe, do all that good stuff. Everyone have a good rest of your day. Good luck at the open. See you in the next stream, and stay green.